Derrick, there's a bit of uncertainty when it comes to the inflation outlook, when it comes to the Ghanaian cedi, when it comes to monetary policy, because we've seen an interest rate hike as well. Is this creating a lot of concern in the investor community as to the direction of the economy?
That's quite true, because we experienced that last week on our market when inflation came in 20 basis points higher. The benchmark policy rate was also increased 100 basis points. But amid all these uncertainties, there was also a revision in the GDP estimate from 13.6% to 14.4%. So investors on the stock market were a bit indecisive as to whether to put their investments in money market instruments, considering the rise in interest rates, or they should stay due to the still the relatively higher risk appetite on the Ghana stock market. So because of this indecisiveness, we had our market very little change from the previous week's performance. We had the broader market gaining just about 0.09%, whilst the financial sector tumbled by just around 0.04%.
Yeah. Going back to the local currency, as we mentioned, the cedi has been depreciating. In fact, it's down around 14% against the pound so far year to date. This has been one of the biggest issues and risks for inflation. Do you think that this is now going to rectify itself, that we could actually see a slightly stronger cedi given the fact that interest rates are also sitting slightly higher?
Well, when it comes to the currency in election years, this has been typical of the Ghanaian cedi. You have a lot of investors speculating, because it's been the trend every election year. And this year being an election year, we were expecting this as well. But we believe that there are certain new measures that the central bank has taken into consideration. It's reduced the net open position of the banks from 15% down to 10%. This means that the amount of single currency that a bank can hold in a particular currency has been reduced. So the speculative positions that the banks take on the currency market is going to be reduced. So due to these policies, we believe that the rate of depreciation will be curtailed a bit. But that notwithstanding, there's still some inherent risk in the economy. So people tend to buy more dollars or tend to keep more dollars as a hedge against inflation.
Guinness has
we believe that the currency...
Yeah. If we could just go into Guinness now, Derrick, Guinness has been doing quite well. I mean, how much more upside potential is there for Guinness? And I'd like to reiterate a point that came through from SAB today. SAB Miller is talking of investing $2.5 billion into investment into Africa because demand for beer is looking quite robust. It's also evident in the likes of Guinness.
Yeah, with Guinness, it's mainly because of the rights issue that they had at the latter part of last year. This helped them pay away some of their debts. It also helped them do a lot of capital expenditure, which is going to boost the volumes that they are going to produce and branch into new products that they are considering. So all this has culminated into the very impressive results half-year results that Guinness Ghana Breweries churned out. And based on those results, we realized that per our own valuations, we also realized that GGBL should be trading somewhere around 1 cedi 83 pesos, which now is trading around 1 cedi 71 pesos. And we believe investors have seen this inherent upside potential in GGBL and have begun bidding up the price as well.
We're seeing quite a bit of confidence being restored in Tallow. Is this now the point where we'll see a lot of investors interested in the stock?
Well, Tallow has been on the upside for quite a while, but it slowed down the rate of appreciation somewhere last 2 weeks. And following the information that has come out that concerning the bribery or corruption charges in Uganda, we believe that now that that is being curtailed, investors or risk appetite in Tallow shares is going to go higher. So we believe that Tallow will be appreciating in the weeks ahead.